Sir, very happy morning to all. So we are doing a slot called as assessment of partnership firm we have done, assessment of LLP we have done, the extension, a very small topic called as AOP or BOI. Sir, what is AOP or BOI? It is association of person. We know individual, HUF, AOP, BOI, AJP, partnership firm, LLP, company, trust. All these guys are person. ஸோ ஒரு ரெண்டு பார்ட்னர்ஷிப் ஃபார்ம், ஒரு கம்பெனி, ரெண்டு இண்டிவிஜுவல், இவங்களாம் சேர்ந்தது தான் அசோசியேஷன் ஆஃப் பர்சன். அண்ட் இண்டிவிஜுவல் சேர்ந்தது தான் பாடி ஆஃப் இண்டிவிஜுவல்ஸ். How we have to tax that is what we are going to discuss. The first we'll be talking about the tax rate. We all know the block which is individual, EHUF, AOP, BOI and AJP. For this 5 people block, the same provisions will be applicable in Income Tax Act. So an AOP or BOI can pay tax at concessional rate under the default tax regime. Under section 115 BAC discussed earlier. We already talked in detail about 115 BAC. 115 BAC is applicable to these 5 people, that is individual, HUF, AOP, BOI, AJP. However, it has to forego certain exemption and deduction under this regime. We know that this is a concessional rate of tax 115 BAC. In order to enjoy 115 BAC, they have to forego certain exemption and deduction. Alternatively, it can exercise the option to shift out of the default tax regime and pay tax under the optional tax regime as per the regular provisions of the Act at the tax rate prescribed by the Annual Finance Act for that year. That means whatever we have discussed in 115 BAC is mutatis applicable to AOP or BOI also. That means you want to travel through concessional rate of tax, travel through the default tax regime 115 BAC route. If you are traveling through 115 BAC route, since we are giving concessional rate of tax, we will be, sir, disallowing certain deduction or exemption. Without giving deduction or exemption, my dear lovable students, you are supposed to pay the tax. But here you don't like 115 BAC, get out of that, you enjoy the full and pay tax at more. The slab rate for assessment year 24-25 applicable to individual HUF, AOP, BOI, AJP, exercising the option of shifting out of default tax regime are already discussed in the chapter number 1, which is the basics, which is nothing but if you are coming out of the default tax regime up to 2.5 lakhs nil, 2.5 lakhs to 5 lakh, 5 lakh to 10 lakh, more than 10 lakh, like that it goes, right? Our oldest things. So this 5 people is a group, individual, HUF, AOP, BOI, AJP. For these guys, generally they will fall under default tax regime. If they want, they can get out of the default tax regime. Computation of total income of AOP or BOI. How to compute the total income? Computation of total income in case of AOP or BOI will be done in the same manner in case of any other assessee. How we have calculated for any other assessee, the same manner only we have to calculate for AOP or BOI. In computing the total income, interest, salary, bonus, commission, remuneration by whatever name called, paid to the members will not be allowed as per 40 BA. This is the difference between partnership firm and AOP or BOI. And this is a logic why I am taking AOP or BOI after completing partnership firm. Because for a partnership firm, since it is legally recognized by a partnership deed, partnership firm can pay interest on capital and remuneration to partners. But association of partners, persons or body of individual will not have a legal document. So they won't say that these are the people who are members, these are the people who are going to share. Even if they have any document, it is not governed by any act like Partnership Act 1932. So what Income Tax Act is saying that when you are calculating the PGBP income of AOP or BOI, interest, salary, bonus, commission, remuneration or by whatever name called, debited to P&L account to its members will fully be disallowed as per 40 BA. That means no interest on capital at 12% and also no remuneration to the members, not to the partners. However, in case of payment of interest, the following provision will be applicable. For that interest, explanation number 1, explanation number 2, explanation number 3 Three explanations are there. These interests are allowed as a deduction. Number one, if interest is paid by AOP or BOI to any member who has also paid interest to AOP or BOI, then only that amount of interest paid by AOP or BOI will be disallowed in its assessment, which is in excess of the interest paid by member to the AOP or BOI. That is, net interest shall be disallowed. This one word is enough. Net interest shall be disallowed. For example, there is an AOP or BOI. AOP or BOI as paid to interest, sir, 5 lakh. When they have to pay interest, that means AOP or BOI is borrowed money from its members, correct? That's why AOP or BOI is paying interest to its members. The same way, member has given loan, sir, the AOP or BOI has given loan to the ARC members. So by interest, the AOP or BOI are getting interest. So how much lakh? 4 lakh. So how much they paid? 5 lakh. How much they received? 4 lakh. What is the net? 1 lakh. This 1 lakh should be added back. That is what explanation number 1. Coming to explanation number 2. If an individual is a member of AOP or BOI, possible because it is association of person. Person includes individual, so one individual can be a member. In a representative capacity, that means I am not member as a individual capacity, but as a representative capacity on behalf or for the benefit of any other person. Then the interest paid by AOP or BOI to such individual in his personal capacity will not be taken into account for the purpose of disallowance. That means there is an HUF. So I am the Karta of the HUF. I am representing the HUF in the AOP or BOI. And from my pocket I have given loan to the AOP or BOI, and for that AOP or BOI giving me interest, that will not be covered under 40 BA, because the interest has not been paid on the member capacity, it has been paid on the individual capacity to me, separate capacity at the 40 BA disallow panna vendiya avashyam illa. However, interest paid by AOP or BOI to such individual or vice versa as representative member or interest paid by AOP or BOI directly to the beneficiary will be taken into account for the purpose of disallowance. But instead of directly paying to HUF, if that AOP or BOI is giving that interest to me and asking to pass on to the HUF, I am in a representative capacity. So it is indirectly the AOP or BOI has paid to its members. So that amount should be added back. Explanation number 3 to 40 BA. If interest is paid to a member who is not a member in a representative capacity, that means I am a member not in a representative capacity, but such interest is received by him on behalf of or for the benefit of another person, the interest payment will be allowed. That means if I am getting interest for some X person not as a representative capacity, not as an individual capacity, then that will be allowed, need not be disallowed. These are the 3 explanations for 40 BA. Explanation number 1 is saying that only net interest shall be disallowed. Explanation number 2 is saying that I am there as a member as a representative capacity and interest has been paid to me as an individual capacity, then that interest will be allowed. Explanation number 3 is saying that if I am getting interest not on representation capacity, not on individual capacity, but for a third person, but for another person, that interest will be allowed. Sir, when we say political party, we heard 13A. When we say electoral trust, we heard 13B. Like that, 1-1 section is there for 1-1. 1-1 NSR assessment. The same way, when I say AOP or BOI, you should say 167B. This is the provision, 167B. So, computation of tax where share of members in AOP or BOI are unknown, 167B. This is a main problem with the AOP or BOI because association of person and body of individual, even there won't be any instrument like partnership deed. So, if individual share of member is not known, I don't know how many members are there, what is the share of each member, what is the agreement between them, then Income Tax Act is in a big struggle, big problem how to tax it. So what they are saying, tax will be levied at MMR, that's it. Because these type of organization we are not recommending, we are not promoting. So if the member shares are not determinable, Settanda AOP, that means the AOP will be taxed at MMR. Sir, however, if the total income of any member of AOP or BOI is taxable at rate higher than the MMR, for example, a foreign company which is a member, then the total income of AOP or BOI shall be chargeable tax at such higher rate. For example, in the members, for example, A is a member, ABC Limited is a member, ABC Foreign Company is a member. Sir, XYZ partnership firm is a member. This can be floated as association of person. Now, in this AOP, I am asking what is the profit sharing ratio. They are saying that no, sir, we don't have a proper instrument or agreement or deed. Then it will be taxable at MMR, maximum marginal rate. But in this, there is one foreign company. We know that foreign company will be taxed at 40%. So for the entire income of AOP or BOI will be taxed at 40%. So what we have to understand from this, my dear lovable students, if the share of members are not known and determinable, set under AOP. Set under AOP in the sense means they have to pay tax at MMR. Even in that member, if there is one foreign company, then the entire foreign company will be taxable at that higher rate of 40%. That's it. Number 2, if individual share of member is known and determinable, that means there is a deed, there is a share PSR, we are able to know it because every AOP will not be unstructured AOP. But still, we don't like the AOP like partnership form, because partnership form there is an act, but there is no regulation for AOP or BOI. Total income of any member, excluding his share from AOP or BOI, he exceeds the basic exemption limit. That means one of the members' income exceed basic exemption limit. That means 3 lakh as per default tax regime under 115 BAC, or 2,50,000 or 3 lakh or 5 lakh as per the optional regime under the normal provision. That means, sir, there are 4 members are there, member 1, member 2, member 3, member 4. Any one of the members' income without including the share of AOP or BOI exceeds the, sir, respective basic exemption limit. Exceeds the respective basic exemption limit. Then we can say that AOP is a big AOP. AOP is a big AOP because one of the members' income exceed basic exemption limit. So the AOP will pay tax at MMR. Why? What is the reason or logic? Because the AOP is a big AOP. However, if the total income of any member of AOP or BOI is taxable at a rate higher than the MMR, for example, a foreign company which is a member, then total income of AOP or BOI should be chargeable as follows. For example, in this member 1, member 2, member 3, member 4, one of the member income exceed basic exemption limit without including the income of AOP or BOI, then that AOP or BOI will be taxed at MMR. But this member number 4 is a foreign company and they are having a share of 25%, then out of the total income, this 25% will be taxed at higher rate of 40%. The balance 75% will be taxed at MMR. That's what they are going to say. Portion of income attributable to such member shall be taxable at such rate as applicable to that member. Balance income shall be taxable at the maximum marginal rate of tax. So, romba simple. We are having 2 circumstances or scenario. Whether the member share is known and determinable, member share not known and determinable. If the member share is not known and determinable, set under AOP, AOP will be taxed at MMR. And in that case, if any one of the member is taxed at a higher rate, the entire income of the AOP or BOI will be taxed at higher rate. Game over. Sir, if the member share known and determinable, check any member's income exceed basic exemption limit. If any one of the member income exceed basic exemption limit, such AOP is a big AOP, then that AOP will be taxed at MMR. In that, if any member income is taxed at higher rate, then that portion will be taxed at higher rate and the remaining will be taxed at MMR. Number 1. Number 2. No member has total income, excluding his share from AOP or BOI, exceeding the basic exemption limit, that is 3 lakh as default tax regime under section 115 BAC, or 2,50,000 or 3 lakh or 5 lakh as per the optional regime under the normal provision. That means none of the member is, sir, income exceed basic exemption limit. That means AOP is a small AOP. AOP is not a big AOP. Then the AOP will be taxed as per the default tax regime under section 115 BAC or optional regime as per the normal provisions of income tax applicable to an individual. That means generally, normally that AOP or BOI will fall in default tax regime. If they don't like an individual, they can get out. This get out option will be applicable only for 5 people: individual, HUF, AOP, BOI and AJP. None other this back route will be applicable. Rate of surcharge applicable to AOP or BOI. So I am consolidating 167B. There are only 2 circumstances are there, my dear lovable students. Share of AOP or BOI determinable, not determinable. If it is not determinable, set under AOP, taxable at MMR. If one of the member is taxed at higher rate, then the entire income will be taxed at higher rate. That's it, game over. Sir, member share is known and determinable. You have to classify into 2 categories. Sir, whether any member income exceed basic assumption limit, none of the member income exceed basic assumption limit. If any of the member income exceed basic assumption limit, my dear lovable students, then it will be taxable at MMR because the AOP is a big AOP, and if any member in that category, if any member is taxable at higher rate, that portion will be taxable at higher rate and the remaining portion will be taxable at MMR. Sir, none of the member income exceed basic assumption limit. That means AOP is a small AOP, my dear lovable students. If the AOP is a small AOP, then what you are supposed to do is tax the AOP at the default tax regime or sir, normal route, optional tax regime, as the case may be. Now we are going to talk about surcharge. Higher surcharge of 25% and 37% is leviable where the total income of AOP or BOI exceeds 2 crore and 5 crore respectively, and they have excised the option to shift out of the default what regime? Tax regime. That means if they are opting out of the default tax regime, normally we know that sir, 2 crore, it is more than 2 crore up to 5 crores, that means 25%, and beyond 5 crore 37% is the normal surcharge. How we have learned the surcharge for an individual, the same will be applicable. Where AOP is paying taxes for the default tax regime under section 115 BAC subsection 1A, the maximum rate of surcharge is 25% for total income exceed 2 crore. Because we know that under the default tax regime, higher rate of surcharge of 37% will not be applicable. So maximum rate is 25%. Okay, fine. Appo, நம்ம எந்த ரூட்ல போனா default tax regime ரூட்ல போனா 25% maximum surcharge, whereas normal tax ரூட்ல போனா 2 crore மேல 5 crore வரைக்கும் 25%, more than 5 crore it is 37%. However, in respect of following income, surcharge cannot exceed 15% both under the default tax regime and the optional tax regime as per the normal provisions of the act. That means this, we all know that these are special rate of tax. Whoever it may be the assessee, surcharge should not exceed, my dear lovable students, 15%. On tax payable at special rates under 115 AD, on dividend income or short-term capital gain or long-term capital gain arising from transfer of security referred under 115 AD. 115 AD is applicable to FII. With regard to FII, sir, they are having maximum 15% surcharge, right? On tax payable on dividend income and tax payable at special rate under 111A or 112 or 112A. 111A, we know that concessional tax rate of 15%, 112 concessional tax rate of 20%, 112A concessional tax rate of 10%. For these item and all, maximum we can charge only 15% surcharge. Where the AOP consists of only company as its members. So the AOP is comprising of only company members are there. 5 company has started AOP, then the maximum surcharge will be 15%. All this has been discussed, we have discussed in the basic module, basic concepts in module number 1, fantastic to the code. Now, how to tax the AOP or BOI we have discussed, how to tax that members, because the share of profit from the partnership firm is exempt in the hands of the partners under section 10(2)(a). The parallel section for 10 subsection 2A is section 86. A member's share in total income of AOP or BOI will be treated as follows. If an AOP or BOI has paid tax at MMR or higher rate, the member's share in the total income of AOP or BOI will not be included in his total income. Yes. Have the AOP or BOI suffered tax at MMR la suffer pannangla or higher rate la tax pannangla? Already huge tax has been paid by the AOP or BOI. Then why are you taxing again that income in the hands of the members? It is exempted under section 86. Brilliant, sir. Logic, sir. If the AOP or BOI has paid tax at regular rates applicable to an individual, that means AOP or BOI is a small AOP or BOI and they have paid tax applicable to an individual, that means either default tax regime or optional tax regime. The member's share in the income from AOP or BOI computed under section 67A shall form part of his income. That means we have to include the share of income from AOP or BOI. However, the member will be allowed rebate under section 110 at the average rate in respect of such share. It is equal to mutatis mutandis, the double taxation avoidance agreement. Same income is going to be taxed in 2% and this is economic double taxation. We are having 2 types of double taxation. One is jurisdiction double taxation and economic double taxation. This is economic double taxation where the same income already, sir, AOP or BOI has paid tax. The same thing we are going to include in the hands of the member and we can claim rebate under section 86. How to compute the rebate is equal to section 91. There 2 tax rate will be there, average rate of tax in India or average rate of tax outside India, whichever is lower. Here no such we have to calculate. If the AOP or BOI has not paid tax on its total income, member share in the total income of AOP or BOI will be included in its total income and taxed at a regular rate. That means if they have the AOP or BOI taxed at higher rate or MMR, put it on dustbin, exempt in the hands of the members. Have they paid at normal rate applicable to individual, the income should be included in the hands of the members and you can claim rebate. Have the AOP or BOI have not paid any tax, just include in the hands of the members, they are not entitled for rebate. This is the, if AOP or BOI has paid tax at MMR or higher rate, member share will not be included in its total income. Paid tax at regular rate applicable either as per default tax regime or optional tax regime. Then the member share computed under 67A shall form part of his total income. However, the member will be allowed rebate under 110 at the average rate in respect of such share. Not paid tax on its total income, member share will be included in its total income and taxed at regular rates. That's it. So how to calculate the 67A? That is computation of member share in the total income of AOP or BOI. Very simple man. A member share in the income of AOP or BOI wherein the shares of member are determinate and known will be computed as follows. Number 1. Any interest, salary, bonus, commission, remuneration paid to a member during the previous year will be deducted from the total income of AOP or BOI and balance will be apportioned among the members in the proportion of their respective shares. Sir, if interest kuduthirukanga, salary kuduthirukanga, bonus kuduthirukanga, commission kuduthirukanga, all these things, sir, if the member share are known and determinable, அதெல்லாம் மைனஸ் பண்ணிட்டு வர பேலன்ஸை நம்ம என்ன பண்ணணும்னா ப்ராஃபிட் ஷேரிங் ரேஷியோவில் அப்போர்ஷன் பண்ணணும். சார் பட் தட் ஷுட் பி ஆடட் பேக் ஃபார் த பர்பஸ் ஆஃப் கம்ப்யூட்டேஷன் ஆஃப் டோட்டல் இன்கம். பட் அதெல்லாம் டெபிட் பண்ணியிருந்தா ஏதாவது கொடுத்துருந்தா அது ரெஸ்பெக்டிவ் ஹெட்டில் ரெஸ்பெக்டிவ் இன்கமாக காட்டணும். ஃபார் எக்ஸாம்பிள் மெம்பர்ஸ்க்கு சேலரி இருக்குன்னா சேலரி இன்கமாக காட்டும். இஃப் த அமௌண்ட் அப்போர்ஷன் டு மெம்பர்ஸ் as per 1 is a profit, any interest, salary, etc. paid to him by AOP or body during the previous year will be added to that amount and the aggregate sum will be such member share in the income of the AOP or BOI. For example, 3 members are there. For example, A is there, B is there, C is there. From AOP or BOI, if we are getting salary, we have to individually credit the salary. Then if anyone is getting commission, we have to individually credit the commission. If anyone is getting interest, we have to individually credit the interest. Then from the profit, after reducing all this, you have to apportion the balance profit on the basis of the PSR. If you add everything, you will get the total share to each member. Super sir. If the amount apportioned to members as per A is a loss, after reducing this, if it is a loss, any interest, salary, etc. paid to him by association or body will be deducted from the amount of loss and the balance sum will be such member share in the income of the AOP or BOI. Share of member in the income or loss of AOP or BOI will for the purpose of assessment be apportioned under the various heads of income in the same manner in which income or loss of the association has been determined under each head. That means if the member is getting salary, it will be taxable in the hands of the salary. Member is getting commission, it will be taxable in the hands of the member as commission, that is IFOS. Any interest paid by member on capital borrowed by him for the purpose of investment in AOP or BOI will be allowed as a deduction while computing his share of income under the head PGBP. That means if the member in order to invest borrow any money, that interest paid can be claimed as deduction under the head PGBP. Now determination of tax where total income includes income on which no tax is payable. Section 110. If the total income of assessee include any income on which no income tax is payable, assessee would be entitled to a deduction from the amount of income tax with which he is chargeable on his total income, an amount equal to the income tax calculated at the average rate of income tax on the amount on which no income tax is payable. That means I am entitled to get a rebate. Sir, all these things we can understand with this one question, illustration number 15. I will do that and I will come back, read again, then everything will be able to match it. JK Associates is an AOP, consists of 2 members, J aged 40 years and K 37 years. Okay. Share of members are 60% and 40%. That means members' share are known and determinable. Income of AOP for the previous year 23-24 is 11 lakh. Total income is 11 lakh. Okay, fine. J and K's income other than income from AOP comes to 2.5 lakhs and 2.9 lakhs respectively. Compute the tax liability of AOP assuming that J exercised the option to shift out of the default tax regime. So if default tax regime means for J, the basic exemption limit is how much? 2,50,000 and out of the default tax regime, and AOP and its member K pay tax under the default tax regime under 115 BAC. So this is the provision, this is the question. So you have to analyze the question. There are two members in AOP or BOI, which is J and K. Member share are known and determinable. We have to check whether the AOP is a small AOP or big AOP. Here, if one of the members' income exceed basic exemption limit without including the share of AOP or BOI, then such an AOP is a big AOP. For that, the member J, 2,50,000 rupees. J and K's income other than AOP amounting to 2,50,000. He is travelling through what route? Sir, normal tax, optional tax regime. Under optional tax regime, the basic exemption limit is 2,50,000. Whereas K is travelling through default tax regime, 3 lakh rupees is the default tax regime. Alright. So, computation of tax of AOP is governed by 167B. Tax on total income of AOP is computed as follows. If individual share of member is known and total income of any member, excluding his share from such AOP, exceeds the basic exemption limit, then AOP will pay tax at the EMMR. This is normal provision. If the individual member share is known and no member has total income, excluding his share, exceeding the basic exemption limit. What is the word? Exceeding the basic exemption limit. Then the AOP will be taxed at a rate applicable to an individual. Here section 86 provides for assessment of share in the hands of member of AOP as follows. This is 167B. This is AOP or BOI kaila. Now yaar kaila varra 86. A member share in the total income of AOP will be treated as follows. If AOP has paid tax at MMR or higher rate, that means the most tax, huge tax has been paid by them, then the member share in the total income of AOP will not be included in the total income and will be exempted. Tiruppi adukku members tax katta vendiya avasiyam illa because AOP or BOI, MMR or higher rate tax kattitaanga. If the AOP has paid tax at regular rates applicable to an individual, member share in the income of AOP will be included in his total income and he will be allowed rebate at the average rate of tax in respect of such share. Now tax liability of JK associates AOP with this background of the provision. Since none of the member have income other than income from AOP exceeding the basic exemption limit, that's what very important. Exceeding the basic exemption limit, because first guy is having income of 2,50,000 which is exactly equal to basic exemption limit. Second guy is having 2,90,000 which is less than 3 lakh basic exemption limit. The AOP will be taxed at the rate applicable to an individual. Therefore, the AOP tax liability would be as follows. And question did not say that they are moving out of the default tax regime. So, I will be putting in default tax regime 3 lakh to 6 lakh at 5%, 15,000. 6 lakhs 1 to 9 lakh at 10%, 30,000. 9 lakh to 11 lakh because question specifically mentioned that 11 lakh is the total income at 15%, 30,000. So, total 75,000. Add health and education at 4%. So, total 78,000 is the tax payable. Have the AOP or BOI paid tax at normal rate? Yes. Then that has to be treated as income in the hands of the members J and K. So, share of profit from AOP, total euro lakh, 11 lakh, take the calculator, 11 lakhs into, what is the ratio? 60%. So, 11 lakh into 60% comes to 6 lakh 60,000 and 4 lakh 40,000. Income from other sources, they themselves given 2 lakh 50,000, 2 lakh 90,000. With that other sources income only, we have compared the basic exemption limit, right? So, total income comes to 9 lakh 10,000 and 7 lakh 30,000. There they have calculated the tax liability, my dear lovable students. J has opted out of default tax regime. So, normal tax regime, normal tax route will be applicable up to 2.5 lakhs, 2.5 lakhs to 5 lakh, 5 lakhs to 9 lakh 10,000 you have to calculate. So, the total tax payable comes to 94,500. Whereas this guy K is travelling through the default tax regime up to 3 lakh nil, 3 lakh to 6 lakh, 6 lakh to 7 lakh 30,000, tax payable comes to 28,000. Had health and education at 4%, I will get the total tax payable 98,280 and 29,120. My dear lovable students, actually for this 6 lakh 60,000 and 4 lakh 40,000, AOP or BOI has paid tax. Now, even the member are also paying tax. This is called as economic double taxation. For this economic double taxation, we have to claim a rebate. There it is 91 rebate, average rate of tax in India or average rate of tax in foreign country, whichever is. Here, only one rate is that average rate of tax in India. So, I have to calculate 98,280 divided by 9,10,000 into 100. So, 98,280 divided by 9,10,000 into 100 means 10.8% is the average rate of tax for J. whereas 29,120 divided by 7,30,000 into 100 means 3.989% is for K. So on the doubly taxed income, that is on 98 from 98,000 to 80 and 29,120, I can claim the rebate under section 86. Read with section 110 in respect of share of profit from AOP. So what is the share of profit from AOP? 6,60,000 into what is the average rate? 10.8% comes to 71,280. I can claim it as rebate. Every sir, calculate 6,60,000 into 10.8%. Here it is 4,40,000 into 3.989%. So the tax liability of the members 98,280, 71,280 pochana 27,000 and 29,120 in the 17,552 pochana 11,568. So tax payable round off come to 27,000 and 11,570, my dear lovable students. So this is what they are saying, that is, if AOP or BOI pay tax at MMR or higher rate, such income will be exempt in the hands of the members. If AOP or BOI pay tax at the normal rate, such income has to be included as income in the hands of the members, and you can claim rebate under section 86, which is the average rate of tax. That's it, man. Now, share of member of AOP or BOI in the income of AOP or BOI to be reduced from net profit for computing book profit for levy of MAT. We have already done this. When you are calculating MAT, sir, AOP or BOI taxed at, sir, if the AOP or BOI taxed at MMR, why they have to again suffer MAT at the rate of 15%. So that income has to be reduced. That's why expenditure incurred under section, sir, expenditure incurred to earn income from AOP or BOI covered under section 86. That 86, only this 86. And income received from AOP or BOI covered under section 86. So under section 115 JB, in case of company, if the tax payable on the total income computed as per the normal provisions of Income Tax Act is less than 15% of the book profit, such book profit shall be deemed to be the total income of the company, and tax payable for the relevant previous year shall be 15% of the book profit. Explanation number 1 below 115 JB subsection 2 provides that expression book profit means profit as shown in the statement of P&L prepared in accordance with the provisions of the Companies Act or in accordance with the provisions of relevant statute governing a company as increased or decreased by certain adjustment as specified below. One of the adjustment is AOP BOI adjustment. We have done with that. Under section 86, no income tax is payable on the share of member of AOP or BOI in the income of AOP or BOI in certain circumstances. That certain circumstances are if AOP or BOI pay tax at MMR or higher rate. A company which is a member of AOP is also not required to pay tax in respect of its share in the income of AOP in such cases. However, prior to assessment year 16-17, under section 115 JB, a company which is a member of AOP was liable to MAT on such share also, since such income was not then excluded from the book profit while computing the MAT liability of the member. Munadi in the particular assessment year munadi, the MAT format la and the line illa. So adanaale AOP or BOI MMR tax katti company 15% MAT kattara mari irundichu, so it will lead to double taxation. So government has amended the format. It may be noted that in a similar situation where the company is a partner in a firm, the share in the profit of the firm is exempt in the hands of the partner as per 10(2)(a) and no MAT is payable by the partner on such profit, since income to which any provision of section 10 apply has to be reduced from computing book profit. This or AOP or BOI la company partner member or partnership firm company member that income is exempt under section 10(2)(a). Anyaya mark. So there is no parallel. Fine. So in order to ensure equity, explanation 1 below section 115 JB has been inserted with effect from assessment day 16-17 to provide that share of member of AOP or BOI in the income of AOP or BOI on which no income tax is payable in accordance with the provisions of section 86 should be reduced while computing book profit for levy of MAT under 115 JB. If any amount is credited to the statement of P&L, consequently clause FA has also been inserted in explanation number 1 to add back the expenditure if any debited to statement of P&L corresponding to such income while computing profit for the levy of MAT. That means when you are calculating MAT, any expenditure incurred to earn income from AOP or BOI covered under section 86 should be added back, and any income credited to P&L account by income from AOP or BOI should be reduced. This is what, my dear lovable students, the taxation of AOP or BOI is. This is a group where, my dear lovable students, taxation of partnership firm, taxation of LLP and taxation of AOP or BOI. The only logic why I am taking after firm the AOP or BOI because of 40BA, because 40B is a allowable section applicable to partnership firm. 40BA is a disallowance section applicable to AOP or BOI. Actually, 40B is also a disallowance because in excess of 12% should be disallowed. Under what section? 40B. Sir, remuneration to partners, my dear lovable students, beyond that 2,70,000 and 60% should be added back as per what section? 40B. So, to partnership firm, that deduction is allowable up to a certain limit. Whereas for AOP or BOI, blanket 100% should be added back. Sir, that's what the difference between that two, guys. With this block of partnership firm, LLP and AOP or BOI comes to an end. Very important slot for examination, a 10-mark area. Put together all the slot.